How is the market in San Diego in September 2022? Well, it's hot as fuck outside, but the market is slightly cooler at the moment. Right now, the median combined home sales price is $800,000. So to put that in context, we are back to February 2022, the exact same median sales price. So we had this big run up until about April. That was the peak of the current market cycle right now. And we are back down to $800,000 for a combined price. That means attached and detached homes. If you look at detached homes alone, they are at $910,000, which basically that tracks back to about the same thing. About February 2022, it was the same median sales price. And April was the high water mark for detached homes at $1 million. This is important to look at and consider because one of the things I heard a lot over the past year from many sellers and clients and people I was talking to was, I'm going to wait and see because I want to time the height of the market. They kept seeing that prices kept increasing, thought that they were going to be able to nail the exact time the market peaked. Now, in reality, what happens is, I'm getting the data today, it's about September 8th. This covers all of August, so you have to go all the way through August. They have to compile it, and if I'm lucky, we get it between the 8th to the 10th. So right now, I'm looking at data that's from at least 30 days ago. On top of that, to establish a trend, you need to see about 2 to 3 months of data to see that it's either increasing or it's decreasing. So if you were out there trying to time the market, the reality of what happens is you're a minimum of about 35 to 40 days behind the actual prices that you're looking at. By that time, the market may have already swung, which is what happened. In April, May, we got the data coming out that the prices were, again, if we take a detached home, $1 million. Right then is when the Fed implemented increased interest rates. It throttled the buyers, the buyer demand, and the amount of people who could be out there paying that price for a home because their monthly payment just could not afford $1 million home any longer. Increased interest rate. So what happened was people who sold in April basically just lucked into that. They were probably preparing their home a minimum of 30 to 60 days in advance of that. And coincidentally, they just hit the peak. So they didn't even time the market. They just lucked into the right time range based on preparing their home and before the different market dynamics substantially changed things. So the bottom line is don't try to time the market for the exact moment. You're never going to get it because basically the only way you know the market's peaked is when you look back about 2 to 3 months to see that you saw that there's a peak behind you. Now we're kind of moving in a different direction until it finds a floor and normalizes. So what you need to do is consider what are your life events, what are you planning for, what are you putting on hold because you need to move first, are you waiting for a kid to graduate, are you waiting for a job offer, job relocation. There's certain things that you can't get back in terms of life events and time. You can't buy your time back. So if there's something that you're putting on hold or you're waiting or there's life events that you want to step into the next kind of chapter in your life, consider a time range, but don't get bogged down in trying to time the market exactly. As maybe a parallel that some people could identify with or understand, if you got to a blackjack table and you showed up and it was really hot, you're hitting every hand, you're up $100,000 and you're only 30 minutes you've been sitting at that table. Now you hit a couple bad hands, you lost $20,000. You didn't lose that money, you were playing with $20,000 of the house's money that they took back. Would you be angry that you had to give $20,000 back, or would you be excited that you just made $80,000 in about 30 minutes? So you have to kind of roll with the punches that you're not always going to get the exact highest absolute peak. Nobody does that. But if you're thinking about a general timeline that's important for you, start preparing because it generally takes 30 to 60 days to get things in the right order so that you can maximize a listing correctly. And what you have to do is then just plan your life events around that. Some of the other important metrics are list price to sales price ratio is at 97.2%. So that means the average offer is now coming in below ask, and those offers are actually waning and going into escrow. So that came down again off of last month, which is about 99% of list price to sold price ratio. Days on market average has moved up to 27. This time last year it was 19. I believe it got as low as 15 days on market for the average listing. So right now average days on market are increasing. This gives buyers a little bit more time to look around and see what's out there. It also means sellers need to plan for a little bit more normal and longer expected escrow period. Longer in contrast only to last year, which was just super overheated and very short market times. This is a little bit more of a coming back into a normal market. So again, it's not a reason to lose our mind. It's just homes can take 30 to 60 days to sell now, which is again a bit of a normal market, but you do need to plan. If you're a seller, if you're moving out of your home, or if it's a rental investment property that you're selling, you need to plan for about at least 30 to 60 days, depending on how you choose to price it. Which brings us to the absorption rate, which is up to 1.6 months of supply. Again, historically, a balanced market is anywhere between 4 to 6 months of supply, meaning if no new homes hit the market today and the rate of buying was continuing at the same pace, it would take 1.6 months to remove all those homes. Again, historically, over long stretches of time, it's always been about 4 to 6 months to see a balanced market. So we still have a long way to go to get there. We are still very undersupplied in terms of the amount of homes on the market, but also in parallel with that, there's a lot less buyers, again, because of what happened with interest rates. So we're going to have to see what happens over the course of this next year. If interest rates can come back down, they're basically right around the 6% mark right now, which is affecting a lot of buyers in a really big way and backing them out of the market because of the affordability of homes at the moment. If you have any questions, I would love to hear from you. If there's anything that you've thought of that would be interesting for me to cover, please don't hesitate to reach out. I definitely want to talk about the market with you.